Good morning, you magnificent melon heads. Today is Friday, March 31st, 2023. I hope you guys are well. Stocks are looking higher this morning. Why? Because number go up, Fed fire hose of liquidity. Of course, number only ever goes up. Look, there is a big story going on right now. It is all over the press right now. It's in every news channel. And my friend Greg Manarino just put out a video this morning and he was right on with what he said when they're saying, look over here, look over here, look over here. Where you need to be looking is over here. So forget the orange herring. You like that? I'm going to put a trademark on that. I want a nickel every time somebody says it. Yay, capitalism. Forget the orange herring, folks. I know that story is going to evoke a lot of emotions out of people, and some people are angry about it, and some people are celebrating it. Team sport of politics. Go team, go team. I get it. Pay attention to the money. Don't take your eyes off of what they're doing with the money. In particular, there's two things that I'm worried about right now. You've got the Restrict Act is out there, all right? This new act that they're doing, they're calling it the TikTok ban, all right? And me and my moderator, Mish, have been talking about this a lot. I don't like TikTok. I don't like the Chinese Communist Party. I don't like communism. I don't like the idea of communists spying on us, all right? I don't like the idea of Mark Zuckerberg spying on us. But Mark Zuckerberg is calling in his favors with politicians that he bought with money that he made from spying on us in order to lobby them to ban TikTok from spying on us. That's a little sus to me. And all this other crap that they're cramming into the Restrict Act right now, like penalties up to 20 years in prison and everything you got for using a VPN to access a banned app. Well, gee, that sounds an awful lot like, I don't know, equating using Bitcoin to transact in money with freaking second-degree murder. 20 years in prison plus everything you got. Yeah, that's about the same penalty for second-degree murder, folks. And that's what they're talking about doing in this Restrict Act that they're trying to ram through Congress right now. And both parties are doing it. They're both doing it, Republicans and Democrats. Rand Paul, to my knowledge, is the only person speaking up and saying this is wrong. I don't know if anybody else, maybe somebody else has done it. I don't watch that many speeches by politicians, so that's why I don't know. There's also talk about a new banking act is going on right now, that they're trying to draft new rules for the banks because of Silicon Valley. Oh, this is going to be great. Because they threw out all the rules that they drafted the last time we had bank failures. Dodd-Frank, remember all the video about bail-ins, about how bank failures were supposed to be treated? Nope, threw that out the second things got tough. So why are they bothering to change the rules when they didn't follow the rules they changed last time this happened? Why? Because they're trying to seize more power. Don't look at the orange herring. Don't pay attention to the story that they want you to follow. Don't start fighting each other. That's what they want you to do. Keep an eye on what they're doing with the other hand, folks. That is your PSA for today. But the main story going on, and I found this story laughable, sad, the whole spectrum of emotion. New York City Mayor Eric Adams is pounding on the table, demanding Wall Street banks, the big banks in Wall Street in his city, come up with a plan to force their employees back into the office. Gee, do you think that has anything to do with the absolutely crumbling commercial real estate market? And what it's doing to New York City, New York City's businesses, their restaurants, their hotels, not to mention the tax basis of that city. What happens when all those office buildings get revalued at fair market value? I'm assuming at some point that's going to happen. At some point, things are going to be, I don't know, valued at what they're worth. Call me crazy. I just think that's how capitalism is supposed to work. But when that happens, New York City is toast. Eric Adams knows that, and he's trying to demand the banks come up with some plan to fix that problem before it blows up in his face. And with that, we are going to shrink my melon of a head, and let's take a look at what's going on in the world of finance this morning. We have got the S&P is up 23 points, about 0.5% at 4,050. The Dow's up another 141 at 32,859, up 0.4% this morning. And the NASDAQ, why not? NASDAQ up another 87 points, 0.75%, 12,013. Stocks can only ever go up. Nobody's allowed to lose money. FOMO in the out of the money calls. Why not? The Fed is just going to print more. And sorry, I said print. They're not printing. Whatever. They're inflating asset prices, whether printing or not printing. They are inflating. DXY is at 102.39, up 24 basis points, about 0.25% at 102.39 this morning. And looking over at the bond market, we got a mixed bag in bonds. The middle of the yield curve is up a little bit. The long end is down. Looks like the biggest mover this morning is the 1 year. Not very much going on in bonds right now. The 1 year is at 4.66. The 10 year is at 3.52. The 1 month is at 4.65 right now. We had a massive, massive move in the 1 month treasury yesterday. Almost 48 basis points, I think, was the move. Keep your eye on the short end of the yield curve, folks. I don't know if this is the debt ceiling starting to be reflected in the bond market. The Treasury general account is getting low. The government's running out of money. And I don't see politicians in much of a negotiating, let's make a deal, let's get this done kind of mood right now. So don't lose sight of that debt ceiling issue, folks. It is not a given that they're just going to rubber stamp that thing. They probably will, but there is a non-zero chance that they don't. So let's not be surprised by that. Looking over at gold, it looks like the big banks are still defending that 2,000 mark. We did get a close above it yesterday. Well, we were right at it yesterday, not a close. Right now, we're at $1,999.10. Come on, give me that 2,000. I'd love to see it on the air. Up $1.55 this morning. Silver is at $24.17, back above $24, up 18 cents or 0.78%. WTI crude is up another 96 cents or 1.29% at 75.32. Watch oil, folks. There's a lot happening in the oil markets right now. It's not making headlines because banks, because orange herring and everything else. But look, we have got some trouble going on in Iraq. There is oil disruptions going on. There's some disagreements between the Kurds and the Turks and the Kurds and the rest of the Iraqi population. That's disrupting about 500,000 barrels per day of oil production. You've got the Biden administration has been very quietly approving leases in the Gulf of Mexico and in Alaska. That's very out of character to see the Biden administration approving new leases for oil drilling. I don't know what's going on there. Somebody sees something in the oil market and they're not telling us. Maybe that's one of the things they don't want you looking at that they're doing with the other hand. Elsewhere, we've got natural gas is up 9 cents this morning or 4.37%. That's a pretty big move to the upside in natural gas at $2.19. All right, one more thing. Brace yourselves, everybody, because reverse repo posts are coming. If you frequent FinTwit, keep your eye on this. Today is the last day of the quarter, so you can expect a big spike in reverse repo. It happens at the end of every quarter. We've seen it before. Look at this big spike that happened at the end of December. All right, we saw another one back in September. So we're going to see a big spike in reverse repo. Expect it. It doesn't necessarily mean anything alarming is going on, at least nothing more alarming than everything else that's going on. So we'll get a big spike up and it will settle back down. Disregard all the noise that's going to come out when people see a spike in reverse repos. Also, just want to mention to my folks over in the Midwest, there is some very severe weather heading your way today. So I know I probably don't need to tell you guys because we tend to have a very well-prepared clientele here on this channel. But check those batteries and check your backup plans because they're predicting some pretty nasty tornadoes this afternoon into this evening down in the Midwest and Tornado Alley. But let's talk about the major story here. This is in Bloomberg, dated 2 days ago. New York City Mayor Adams urges Wall Street cooperation to get workers back to offices. Eric Adams is sick and tired of people not returning to their offices. Why, Eric? Why is it so bad that people are allowed to work from home? I thought you were all about the climate and using less energy. Why do you want everybody to sit in their cars and sit in traffic and burn fuel and emissions and the planet and the unicorns and the rainbows? When it hits you in the wallet, now it's a problem. I see how that works. Exasperated, New York's mayor wants JP Morgan Chase and Goldman Sachs and other major employers to come together and agree on ways to force more to return to the office as the city's economy struggles to recover from the pandemic and new challenges. And isn't that just the way politicians operate? When you don't get what you want, get the big banks to use the power of other people's money to force what you want onto people. Isn't that always how these people operate? All of our corporate leaders need to get in the room and say, let's come up with a minimum, Adams said in an interview with Bloomberg on Thursday, referring to how many days a week employees should be in the office. If it's 4 days a week, it's 4 days a week. No, Eric, people don't want to come to work 4 days a week. If they can do the same job at home, nobody's going to want to sit in traffic in your awful cesspool of a city. Sorry to my New York folks. I hate your city so much. But don't worry, I don't discriminate. I hate all cities equally. So I'm not picking on New York. I also don't like Philly. I also don't like LA or Chicago. I don't like cities. I don't like it. I like grass and trees and farms and the smell of manure in the morning. So sue me. But moving on. Look, New York City, their tax basis is in big trouble. New York City's businesses are in big trouble. If you run a hot dog stand outside the JP Morgan Chase building in New York, guess what? Your hot dog stand is not selling hot dogs because nobody's coming to work to eat them. And that is hitting every business in New York City. And when those businesses start to move out, when those CMBSs start to mature, and when those mortgages need to roll over, those buildings are going to be revalued lower. And what do you think happens to New York City's budget when that happens? What happens to New York City's tax revenue? Eric Adams can see the writing on the wall, and he's trying to get out in front of it. Something else I just want to talk about, folks, is this one. They're starting to do the postmortem on Silicon Valley Bank. You're going to see a lot of this in the future. Fed blame game on SVB collapse stretches from D.C. to California. San Francisco branch lost key people overseeing the region's banks. And I just want to zero in on this paragraph right here because she's probably going to get away with this. But I just want to mention this one. At the San Francisco Fed, largely responsible for monitoring Silicon Valley Bank, not largely, entirely responsible for monitoring Silicon Valley Bank, there was heightened turnover among supervisory officials in recent years, according to people close to the situation. The culture under President Mary Daly at times put more emphasis on improving relationships among staff than installing people with strong oversight backgrounds, leading to departures, people said. Understand that. The culture at times put more emphasis on improving relationships than people with strong oversight backgrounds. It's their job to oversee banks. And Mary Daly was more worried about whether or not people are playing nice in the sandbox than whether or not these were good regulators, whether or not they were good bankers. And this is Mary Daly right here, folks. She is the head of the San Francisco Fed. Get a good look at her because they're going to be looking for somebody to blame. They're going to try to blame capitalism. They're going to try to blame, I don't know, climate, whatever they're going to try to blame. They'll blame anybody but Mary Daly. And does anybody remember this? This building, this shed? Does anybody remember this? This is Moonstone Bank, formerly known as Farmington State Bank. I did a whole live stream about this back in November. This is the bank that Sam Bankman-Fried bought that was approved by Mary Daly, approved to join the San Francisco Fed system. This shed with fewer than $1 million in assets and three employees was welcomed into the Federal Reserve System. And who welcomed them into the Federal Reserve System? Well, I'm glad you asked. Here we go. Dated June 30th, 2021, signed by the Honorable Mary C. Daly, President and Chief Executive. To all banks within the 12th Federal Reserve District, the Federal Reserve Bank of San Francisco, acting under delegated authority, has approved the application of Farmington State Bank for membership in the Federal Reserve System. And here it is, signed down here by Mary C. Daly. Mary Daly approved Sam Bankman-Fried's bank to join the Federal Reserve System. Mary Daly was responsible for the oversight of Silicon Valley Bank. Mary Daly created a culture where as long as you acted nice and were friendly in the office, you could work at the Fed. If you were a good bank regulator, but you were a kind of a jerk, you were out. So when they are looking for somebody to blame, who is responsible? If they don't haul this woman in front of Congress and hold her feet to the fire, then they're not going to solve the problem. Don't hold your breath. I don't expect them to do just that. Anyways, guys, I want to say thank you to a couple of people in the chats here this morning. There are a lot of you guys, and I'm going to try to get everyone. But, man, it is hard to find these super chats in the chat. Come on, guys. First, I got to say thank you to my man, Nashville Pasta Man, who bought Mish a coffee. Where is he? Where are you, Nashville? Hey, Nashville Pasta Man, thank you. He says a Friday morning coffee for Mish the Man, and that was before we even went live. And then he said a Chick-fil-A for Melonhead. Well, Mish and Mish will have a Bang Energy? Is that your favorite one, or a Monster beverage? Mish doesn't do coffee. Mish does energy drinks. I hook coffee up to an IV if I could help it. But Mish will have an energy drink, and I will have Chick-fil-A. Thank you very much, Nashville Pasta Man. I appreciate the super chat and the support of the channel. And thank you, Fatty McButterpants. It says, keep up the good work, and thank you for keeping us informed about all the BS the mainstream financial media is trying to shove down our throats. Yes, sir, Mr. McButterpants, absolute BS. And not that they're trying to shove it down your throats. They're trying to sneak it behind your back while you're not looking because they're trying to distract you with, at the moment, orange herring. They will use stories that make us hate each other to distract from what they, capital T, to what they are doing to us, to we. Don't let them distract us. Don't let the orange herring be the dominant story in the news cycle. Watch what they do with the money. That's how they seize power, folks. And thank you, Dan Hedin says, watch out for the melt up. I mean, we're watching a melt up, Dan, in real time right now. And, as soon as the Fed started this bank term funding program and increasing their lending facilities and opening up the discount window, that's when you knew this melt up was going to happen. And that's why I always say rule number one is don't fight the Fed. If the Fed is tightening, get out. If the Fed is pumping, get in. I mean, obviously it's more complex and more nuanced than that. But right now, we don't have price discovery. We don't have open, free, and fair markets. We don't have Party A buying from Party B. We have Party A and Party B each trying to guess what Party C, the Federal Reserve, is going to do. And that is how prices are now determined. We do not have capitalism. We do not have free and fair markets. We have 100% rigged markets. They're rigged by central banks at the expense of the currency, at the expense of the quality of life of the average person. Thank you very much, Dan Hedin, sir. I appreciate the super chat and the support of the channel. And I think I got everybody. Did I get everyone? I did. Thank you very much, everybody. All right, guys. Looks like we are going to have another big green day. Oh, wait. Mike Kathman. He snuck it in there. Very, very crafty, Mike Kathman. He says, I'm a perma bear myself, as am I. But some smart guys saying things will be okay. Some many things negative. What do you think, Jack? All right. Do I think things are okay? No, pretty far from okay. I think things are awful. The banking system is teetering on the edge. The average person's quality of life is well below where it was a year ago. That being said, that doesn't mean number can't go up. We can have rising asset prices and rising misery among the general public at the same time. And that's what we're seeing right now. The problem is that creates immense pressure on society, social anxiety, anger, resentment among the classes back and forth toward each other. It creates really awful scenarios. And right now, it seems like the powers that be, the press, the elites, they're trying to poke that bear through the cage, trying to get us to fight each other so they can ram more of this stuff through. So it can get worse, Mike, but that doesn't mean number can't go up. Thank you very much, Mike. And thank you, other Mike from Robin RC. He says, that bad with the CMBS, huh? How long until boom? CMBS is already going boom. Watch that sale that we talked about. Was it yesterday or 2 days ago when they bought in for the leftovers of Signature Bank, that $60 billion bag of mostly commercial real estate? I think it was Hallmark that they bought in, the name of the group. I can't remember the name of the commercial real estate outfit that they bought in to unload that stuff. When that hits the market, if they are not super careful about how they sell that stuff, that is going to create a big problem in the CMBS market, because the market just can't absorb supply right now. The CMBS and the commercial real estate market, it cannot take new supply. Everything they've been doing with seizing the banks and freezing the withdrawals at the Blackstone REIT has all been about limiting the supply on the market in order to keep the prices up. If they go and dump $60 billion worth of commercial real estate, especially when we've only had $4.5 billion of CMBS issuance total year to date, it's going to crash prices. So that, I think, is when it goes boom, depending on how they do it. I don't know if they're going to figure out a way to unload that stuff without causing problems. Thank you very much, Mike. And thank you, Inflation Situation. Says it took me a minute to catch on. Orange herring priceless. Good work, brother. Glad somebody caught that. Yep. I was going to try to Photoshop something of an orange herring, but you know what? I ran out of time, and just better uses of the time than doing that. But yes, the orange herring. Do not pay too close attention to the orange herring. All right, guys, thank you very much, everybody, for the super chats and for the support of the channel today. I appreciate that. Also, thank you to my Patreon supporters for everything you guys do to the channel. Link down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. They're probably on their way to the house right now. Going to spend some time with Mom and Dad this weekend. And everybody, until next time, live small and dream big.